In the ongoing battle between Bitcoin and gold, Coinbase CEO makes a bold proclamation. Bitcoin is a new gold. With the Bitcoin gaining traction as digital gold, can it surpass the traditional safe haven asset? Stay tuned as the crypto versus gold debate hits up. Don't forget to subscribe, like, and share, and let's start. And we're starting off with some news. Goldman Sachs, Citadel, Citigroup, and UBS have all just been added to authorized participants on BlackRock's Bitcoin ETF IBIT. Expect liquidity to accelerate as everyone can start making money now because the AP's job is to provide liquidity for the fund. So why you would need so many of these big hitters if it was just supposed to be a small fund is beyond me. I suspect BlackRock is readying the funnel for large amounts of inflows over the next year or so. Assessing the Bitcoin long-term holders, we can see their realized profit loss ratio has gone exponential and vertical. So this is a result of there being no LTHs in loss when the market has only recently broken above the previous cycle's all-time high, and is further fueled by a significant uptick in LTH profit taking. Bitcoin bounced back by 3% or nearly 67,000 after hitting 65,500 earlier this week. Analysts suggest a possible dip below 60,000 before resuming the upward trend, as the market sentiment remains cautious with the high funding rates reminiscent of previous price drops. As traders are unsure, but they are excited about the upcoming Bitcoin halving event. President Roosevelt signing Executive Order 6102 banning gold on April 5, 1933, exactly 91 years ago. For 40 years, US citizens couldn't defend their money from inflation. This is why we use Bitcoin now. With the Bitcoin halving in 14 days, current supply demand, Bitcoin mass of Bitcoin mined 3600, of Bitcoin bought by the US ETFs 4470, of Bitcoin bought by Mr. 100 2267, and of Bitcoin bought by number 3 is basically people saying Robinhood 700, and there's amount of Bitcoin remaining for 8 billion people is basically zero, as I would say, and even the minus something. New Australia's first Bitcoin ETF to go live this year, says asset manager Monochrome. So same, we are so early. Bitcoin. How can Bitcoin have went from pennies to 70,000 in only a few years, and I cannot find one person interested in it or crypto at all? I feel like I came late to the game in 2020, but recently I'm beginning to think otherwise. I cannot find one person in my friend acquaintances group who is involved in the crypto. It's crazy to me. I even started to bring it up to random people at the bank, hair salon, and other places, and no one I have talked to is involved at all. They think it's a scam and not backed by anything. I don't understand. Bitcoin has went from pennies to 70k and the whole world still isn't talking about this. It's so strange to me. Maybe it does mean we are all early still. Also, historically, the Bitcoin halving event leads to a massive rally, but not before a period of choppy price action, designed to shake people out. Don't fall for it, the best is yet to come. We are buying Bitcoin to hold it 100 years. That 66,000 to 16,000 crash shook out the tourist. When it was 16,000, we were all ready to ride it to the zero, Michael Saylor says on his interview. The Senator Cynthia Lummis questions why the US would be selling their Bitcoin holdings, and she goes with, the US government is currently the largest nation-state holder of the Bitcoin. Are we about to forfeit our lead to China? Should the US government hodl? As basically China is getting closer and closer to destroying the US holdings as US continues on selling and China still holds their assets without not selling any. The Bitfinex whales continue to signal 71,000, and I tend to believe them. The sellers want a higher price. Tick-tock Bitcoin. Imagine being BlackRock and thinking you would get $20 billion in your new fringe Bitcoin product over a couple years. And 3 months after a launch, you have to ramp up the funnel 5x for $100 billion. And you realize you can't even put in $1 billion without moving the market because of the bull market multiplier. Trust me, Bitcoin feels like a Silas to Larry right now. He thought he was taking an aspirin. Also, breaking news is BlackRock adds all the banks Goldman Sachs, Citadel, UBS, and Citigroup to Bitcoin ETF as authorized participants. Wall Street has arrived, don't sit on the sidelines. Given the current economic landscape, here's what I expect from Bitcoin over the next 18 months. Bearish scenario 150,000, base case 300,000, bullish scenario 500,000. This is 100% correct. Rich folks are now selling rental properties and buying Bitcoin. Smart folks are working 2 jobs to buy more Bitcoin, stack harder. That's basically what we need to do. Next up, Coinbase compares Bitcoin and gold. Can Bitcoin dethrone gold? So while the competition between Bitcoin and gold continues, Bitcoin supporters argue that Bitcoin is becoming more and more adopted as a digital gold. At this point, while Bitcoin supporters stated that Bitcoin will gradually replace gold, a new Bitcoin gold themed report came from Coinbase. And at this point, Coinbase said that the increasing adoption of Bitcoin as a digital gold could attract new investors. The report, written by the Coinbase analyst David Hahn, also stated that the Fed's cautious approach to interest rate cuts led to a decline in cryptocurrencies along with the risky assets. So David Hahn stated that the Fed's cautious approach reflected positively on gold and that gold performed better after the Fed's cautious stance. Gold appears to have performed better after the Fed took a cautious stance on the pace of future interest rate cuts. While this stance of Fed brings a decline to the Bitcoin and cryptocurrency market, the increasing acceptance of Bitcoin as a digital gold may attract new investors to the market. As a result, we think DEEPs are and will be bought more aggressively than in previous cycles, even if price volatility continues. Finally, the analyst evaluated the impact of spot Bitcoin ETFs, as the analyst stated that there was more capital inflow to Bitcoin after the launch of ETFs and that this increased capital inflow could cause less volatility. As analyst David Hahn said, capital opened by spot ETF represents the most fundamental change between the previous 2020-2021 cycle and today's cycle. This is why the Bitcoin crash could continue. Although Bitcoin has recently bounced back, securing some gains, storm clouds are gathering on the horizon. So the massive short selling positions. On the CME, the main regulated trading platform for Bitcoin options, one figure is particularly chilling. At the end of the first quarter of 2024, fewer than 16,000 short selling positions were held on standard contracts, an unprecedented level reflecting the voracious appetite of institutional investors for bearish strategies on Bitcoin. So the marriage of windy Bitcoin carry trade. In the current context of economic slowdown, the yield differential between investment in USD and Bitcoin seems like a boon for speculative funds. So while the US Treasury rates hover around 4.3% in a 10-year segment, short selling positions on Bitcoin for 3 months can expect annualized gains over 10%. This disparity has generated a real phenomenon of Bitcoin carry trade, where investors bet on a sustained weakening of crypto to take advantage of this substantial yield gap. And however, this strategy carries an inherent risk of exacerbating volatility. Indeed, leveraged short positions amplified by hedge funds have a mechanically multiplied impact on price fluctuations, as thus the slightest sign of the weakness could trigger a wave of massive sales. So that's kind of all the information we got for today's video. Don't forget to subscribe, like, and share. See you in the next one, and peace.